Good afternoon, everybody. Thank you for joining us for this session. What we're going to be looking at here is cross-border sales from UK websites and seeing what impact COVID has had, if indeed it has. I don't want to presuppose anything, and where we think that kind of thing's going. So my name's Andy Mulcahy. I'm Strategy and Insight Director at IMRG. What we do is we are the trade association for online retail in the UK. So we benchmark sales from about 200 retailers. And we do a whole sort of insight program based around that. I'm joined by Neil from Global-e, who will come on in just a moment. But first of all, what I'm going to do is just show you a few slides, because what we're doing here is we've just launched today a new index with Global-e. So it's based on their data sets, and I'll let Neil explain what Global-e do when we get to them. So we can see all kinds of different things going on with cross-border sales. So I'll just show you 4 slides of content, and then we'll speak to Nick. So moving on to the first slide. What this is showing you is an index. So that ranking along the y-axis there is an index value. If you're not an analyst, then don't worry about it too much. It gets a bit complicated to explain, but really, is that line going up or down? That's the thing that you're looking at there. So starting in January 2020 and then all the way to August, that is showing you how that line has gone up and down in that index. So what you can see, and as I said, this is UK based retailers, and this is cross-border sales, so sending things, sales coming in from other markets. And what that's showing you is that in January, when the index launched in January, so it's based on the baseline there, it was down in February, and it was down slightly in March, but then it's kind of shot up really quite a lot since that. So what's going on there? And straight away we're bringing in the C word, COVID, and it's pretty clear that that's what's having a bit of an impact there. Now, internally in the UK, when COVID hit, which happened in March, there was kind of a drop in a way, and then there was a big sort of boost as we got into April and May, and a similar kind of thing happens here. It's just that because it's into cross-border markets, some of those were already in lockdown and things in February, so hence that looks like it came forward a bit there. But on to the next slide, we can see in slightly more detail here, and this is going to show you the EU and non-EU split. Next slide, sorry. So that's showing you that same information there, but it's split this time by sales that are going to EU and non-EU. So the blue line is EU, and the orange line is non-EU. So the pattern looks exactly the same. It's just that there's quite a difference between those volumes between the two. So the non-EU came down a little bit, and then it kind of recovered pretty quickly and went up much higher. And has stayed at a pretty high level there. And the ones to the EU suffered quite a bigger drop, and then it took a little bit longer to get into positive territory, which it did into May. Now, you probably look at those two things and think, well, I've got to bring in the B word here. So it was probably Brexit, right? Because that's an EU thing. We're not too sure about that, really. It could be that some of those markets in the EU got hit really very badly in the spring. So if you think about places like France and Italy, etc., it was really quite bad there. So it's quite possible that that's actually exerting an impact rather than anything specific to Brexit. If we move on to the third slide now, we can show you a slightly different data set here. So the same kind of thing, but this time we're looking at month on month. So again, it's EU and it's non-EU. So what month on month means is if you take August, for example, was more money or less money spent in August relative to July, and that kind of pattern that you see there isn't really uncommon. And what you can see is, as we're looking at with the index just now, you got a kind of decline into February for the issues just discussed, and then it kind of shot up rather a lot. Now, if you were to look at a line across a year, a normal year, should we call it, one that doesn't have a massive impact from a pandemic, then you would have seen probably a slightly different lines. And when you've got that very positive month-on-month growth in March, April, May, you see it falls away in June, July, August, but actually that's pretty normal because the summer months relative to the spring ones, that you do tend to get a bit of a fall in the way because people go on holiday, etc. So there's just a bit less of that purchasing going on. And then the final thing we're going to show you here on the final slide is to look at the payment split. So what we're looking at here is for EU on the left-hand side and non-EU on the right-hand side. And the blue box is credit cards, so payments made by credit card, and then the orange bar is global alternatives. So that's things that are alternative payment methods that are all over the world. So PayPal would be a good example of that. And then the grey box is a local alternative is used. So something that's specific to that territory, maybe not getting anywhere else. So something like Ideal in the Netherlands would be an example of that. And you can see those kind of differences there. Credit card a lot more popular in non-EU countries, and then the global alternatives. They're the ones that are kind of pushing up, if you like. They're the ones that are getting a bit bigger, and local alternatives a bit bigger in EU relative to non-EU. So that's kind of the index data that we're doing. As I mentioned, we've launched with Global-e, and now's a good time to bring in Neil from Global-e, who will be able to introduce himself and explain what Global-e is.
Thank you very much, Andy. Hi everybody. I'm Neil Cushel. I'm the CEO of Global-e in Europe. For those of you that don't know about Global-e, we are a technology company. We build into the e-commerce platform of online retailers to provide them with full localization around the world. So by geolocating where a consumer hits the website from, we could then serve 26 languages, 100 different currencies, 150 payment methods. We have dynamic duties and tax calculation, shipping options and returns. So we've partnered up with IMG. We're really excited. We've got 450 merchants, brands who use Global-e. We've picked 200 UK brands that have been live long enough to allow us to build this index, and we're going to start tracking a quarterly index now in order to see what's happening to UK merchants cross-border sales for the next 2 years, and very excited to start bringing that data to you. So today is the first launch of that set of data, and thank you, Andy, for presenting it. And
the next quarter that we get, of course, will be weeks before Brexit happens, so it's going to be interesting to see what happens with those lines. I think over that time. But what that index was showing was EU and non-EU, so some big collections there. But what about if you look at the sort of specific countries for UK merchants? What are the sort of popular cross-border markets typically?
Well, it varies dramatically by merchant, and a lot of it depends upon your brand awareness and strategy. But it's the normal markets. It's the USA, it's the Australia, it's the France, Germany type markets that you would expect. But what we find actually is once we've been live with a brand for quite a long time, or certainly 3 to 6 months, then what we see is a lot of the rest of the tail markets become quite big. You often find that a brand will see that probably 75% of their sales will come from their top 4 or 5 markets, and what Global-e will help to do is grow that, but also build out all that long tail of market that is too difficult to localize. So in that case, we see some really interesting trends then, and you see brands getting really strong growth from markets they weren't expecting, like the Middle East and Asia Pacific. So it's pretty varied.
And so how do you build out that tail then? So if you've got, the US would be an obvious one because it's a shared language and all that sort of, typical same customs and things. But I don't mean that. I mean, doing stuff. Yeah. But then there's a load of other countries where maybe the language isn't the same and stuff like that. So, how do I go about that?
Well, that's a very key point, because effectively each consumers in different countries act very differently, even if they're quite close by. So an American consumer is very different from a Canadian consumer, particularly when tax and duty differs so much. A French consumer is different from German, Israeli from Emirati, New Zealand from Australia. So they're all very different. And actually, so what a brand needs to be able to do is to understand how to localize in each individual market in order to take advantage of the sales in those countries. And because we can see what 400 brands do to 200 countries, then we see what really works.
So you've got to do your homework, which is really annoying, isn't it? Because you don't like doing homework.
Yeah, or get us to do it for you. But yeah,
where were you when I was at school? That's what I want to know.
Yeah, that's right. It's quite interesting. And when we bring it back to the index and to what's been going on, particularly when we talk about, you mentioned Brexit, you mentioned coronavirus. They're the 2 big macroeconomic things hitting brands at the moment. For coronavirus, different countries consumers from different countries went into lockdown at different times and have reacted differently. So the American consumer was very different. The first brands that we saw that went into a decline were in Asia. So back in the days, if you remember when coronavirus was an Asian issue that we didn't really have to worry about, and we saw impacts in Asia. But then by the time you get into February, they were sort of kicking back out again because they were recovering. Whereas you see the dip that's going on from those prior graphs, that the European markets started to go into it in February, March, April, at various different times. The French and the Spanish were in, and the Italians were in first. We went in a little bit later. So what you're seeing is brands that had localized and were selling effectively around the whole world were far better hedged against the coronavirus fluctuations, because at the point that, if they were heavily leveraged on America, which struggled for a fair amount of time before getting back better in May, then the more countries they sold to, the better they were able to ride that balance, particularly when you see that non-EU markets in that second graph were far more resilient to coronavirus than the European markets.
So good evidence for a bit of diversification, if ever there was some. So what about some of those? Talked about the popular ones, and it's kind of the ones that you would assume, I guess. What about lesser known ones, perhaps interesting ones to look out for?
I think the Middle East was the standout for us, because in the Middle East, whilst they had a lockdown, they didn't get particularly badly impacted from a health perspective. Very high incomes, a lot of disposable money. All of the shopping centres got shut down there, which meant you had this fairly wealthy, fairly well educated in cross-border online transactions anyway market that suddenly couldn't shop in their local shopping centres, and everything went online. And it was combined with Ramadan and Eid, which is a traditional gift-giving time, and suddenly it went through the roof. We were seeing March, April, certainly April, May sales to the Middle East being almost 3, 4, 5 times what they were for many brands in January, February. So that was a real eye opener.
And the significance of the shopping centre in places like Qatar and stuff is because it's incredibly hot, and then they provide these spaces where it's nicely air conditioned and stuff. So they're very popular, aren't they?
Yeah. I lived in the Middle East for 10 or 11 years, and it's a social meeting ground. It's a coffee shop. It's the whole environment. But now that they're open again, sales haven't gone back to their pre-coronavirus level, because what's happened is that consumers have realized that the brands that they like to shop from, they've got a far greater choice of product on the online store than they tend to have in a physical store within a mall. And if the brand in the UK has got the shopping offer right, so making sure that the prices are the right level, that they're in Saudi Riyal or Emirati dirham, that they're including the cost of the tax and duty in the product price, and they've got the right shipping methods like cash on delivery in the Middle East, etc., then effectively we're seeing that people have got used to buying online. And whilst the huge peak of May, it's come down from there, it's probably still 50% bigger than it was in January, and that's the legacy hangover of the trend towards moving online.
And I've got to get onto the B word, of course, again. So it's been going on for, don't we know it? It's been going on for 4 years now. So in that time, what has changed from a sort of purchasing perspective? Has it pushed things around into different markets?
I don't think, and I'm talking from a personal viewpoint here, I don't think it's made too many difference to buying habits yet. I think where it has made a difference, actually for British retailers in a fairly good way, is that the sterling devalued, which made British products cheaper relatively to other currencies, and that made it easier to sell cross-border. On the flip side, it makes imports more expensive, and you've got some concerns about currency that way. But I don't think it's had a tangible impact on the sales yet. The big question is what happens in January. Is it going to be trading on World Trade Organization rules? Is it going to be a last-minute deal? And that's the problem for brands, because it's the not knowing what to do. Because a brand has to be prepared that on the 1st of January that they're able to then sell into the EU with customs regulations. So they, commercial invoices, a duty management scheme, so they know what. And by that I mean a decision as to what brands are going to do about customs duty. Are they going to charge it to the consumer? Are they going to absorb it? Are they going to do something in the middle? And then particularly on logistics, how are you going to get stuff in? Because the Channel Tunnel, particularly with, you hear these horror stories of, lorry parks in Kent, that could be a logistical challenge. So brands, regardless of what happens in terms of negotiation, have to be ready for that. And so that's what we're being busy preparing for.
Let me sort of mix the B word and the C word together then. So we've got Brexit and COVID, right? So we know you think that with from the stuff that you've seen, Brexit hasn't really had a discernible impact yet. January, maybe it will. So have you seen from COVID, has there been a shift in the sort of mix of where stuff's going? Is it like the stuff used to go to US and then there was a shift because lockdowns and all sorts of stuff?
I think it's a bit of a rising tide floats all boats situation, if you know what I mean. So I think where we are is that there was already a trend for people switching from bricks and mortar towards buying online, and I think coronavirus has concertinaed a lot of many months or years worth of that trend into a very short period of time. Now, different countries, I think, are reacting slightly different to it. But now we're seeing, particularly in markets where maybe there wasn't such a high penetration of online purchases. I think these people have now realized, these countries have probably concertinaed 2 or 3 years growth into 6 months, whereas places like America, which are already pretty used to buying online, they're much further down the journey anyway. And I think that's why, going back to that second graph, not necessarily showing you go back, but on that second graph that shows non-EU and EU, I think that's why you're seeing a much bigger increase in the post-coronavirus online cross-border sales to the non-EU, because those markets were further behind, and they've really been forced into the online cross-border market now. Realize it's not actually that hard, and so they're growing far more rapidly than the EU market.
Just had a question in. I don't know if this is one that you have visibility of, but just a question about whether you've seen any changes to how your retailers are managing their DCs and 3PL partnerships. So they're doing sort of more consolidated or opening more locations or something. Is that something you have a view on?
Yes, and I see that question is from Paul Walker, one of our existing brands actually, and so Vivo recently have just done a great example of consolidating their DCs down into fewer, because actually you've got some brands who are looking to move closer to market, but the cost of having warehouses in multiple countries and multiple stock holdings and then lots of different shipping is quite high. You have to have a lot of sales to make it worthwhile having multiple warehouses. So we are seeing a lot of brands moving warehouses into Central Europe and consolidating them together there. We're seeing a lot of use of, and from a logistical point of view, using 3PL partnerships or using global e-carriers, it's really important to have multiple carriers, because at the moment what's very, very difficult is that that certain carriers are struggling so badly with shipping into different markets that we've got to be in a situation where brands can flick between carriers. Because as one carrier goes, sorry, I can't service the Middle East anymore because I can't get uplift, there's, brand can't not sell. They've got to have the ability to flick around. So that's really important.
And also pertinent, I think, to the UK market coming up to a peak that could be beyond the scale that we could possibly have imagined, really. But just looking at the payments, and we showed the sort of split of payments, and we're looking at global and local ones. Is there any view of sort of which alternative payments are doing better than others?
We're seeing things like Klarna going very well and getting a foothold in a lot of other countries. I mean, Klarna started off being very strong in Germany and the Nordics, for example. But now we're seeing it take a big foothold in the UK, in the USA, it's starting in Australia, a lot of the other European countries. So we're seeing a move towards that, as particularly young people tend to be moving away from credit cards and on to paying in installments in managed ways like Klarna. So we're seeing a lot of those. As the growth towards mobile becomes a lot greater. And I think we're expecting somewhere in the next 12 to 18 months that mobile transactions will equal desktop transactions for global, because globally it's still more prevalent towards desktop. But as that happens, more mobile wallets, more cards being kept in mobile wallets, because people don't want to be fiddling around with credit cards on a mobile device, and particularly in a situation when we start to move towards PSD2, not PTSD, PSD2 in Europe. Yeah, there's a bit of a difference. They're both stressful, but slightly different.
What is there like a type of brand that does well? Maybe selling like certain type of stuff or a certain size or whatever.
I think it's less about the product. I think it's more about the approach to the markets. The brands that have done well are the ones that have realized, actually, I need to be live and I need to be global and I need to have a great user experience to every country in the world. And they tend to be the younger, more nimble brands. The more established brands that have been dependent on bricks and mortar and retail and high street have taken a lot longer to embrace the online world. And even in this last sort of 6 to 9 months, in many cases, they're so focused on CVAs and stores and how to survive bricks and mortar changes, that many of them haven't had the time to really get online yet. And that's meaning that young, nimble, agile brands with a good product and a good strategy and a good localization offering are able to really eat into the market share of the big boys quite quickly.
And then when we talk about cross-border, it's actually quite a difficult term to kind of define, isn't it? Because if someone comes to your site and then they buy something, so they're in France and they buy from you in the UK, it goes cross-border, you send it over there. But there's different things you can do, isn't there? You can open up a DC over there. You could do some localized stuff. You could have local customer service. You could have a shop. What do people do? What's the sort of typical pattern?
There isn't really a typical pattern, and I think this is the interesting thing with e-commerce. As I say, we're almost at 450 brands, and every brand have their own strategy and their own view of things. Some, like Vivo, we spoke earlier, very much about sustainability. They want to make sure they're minimizing the carbon footprint and that they're being sustainable. You've got other brands, some of the fast fashion brands who historically have been non-sustainable but now want to be more that way. And so I think it's a horses for courses scenario. And what's important is that brands understand the options that are available to them, because it is perfectly easy and acceptable to service the whole world from one location these days. Logistics are good enough. Tech solutions are good enough to give a localized experience. You can actually manage the whole world from one scenario, from one location, if that's what you want to do.
And we're sort of up against time, but we've got about a minute left, I suppose. So if I'm sort of new to this, right? If I'm looking to sell cross border, what should I focus on first?
Okay, so the first thing to do is accept that cross border is here to stay, and that you need to be global in every market, and you need to be localized. Then the question is, once you've made that decision, do you use someone like Globally to do it on your behalf, or do you try and build it out yourself? And obviously,
what would your answer be then?
I would suggest you give us a call and at least find out from Globally how it is to not do it yourself, and then make an informed decision. That would be my advice.
Excellent. All right. Well, thanks a lot for that, and I hope you found that useful. There's a lot of useful information for you there. So I don't know if there's sessions left after this, but if so, then enjoy the rest of the day, and thanks for joining us.
Thanks very much.